Welcome to Open House, the real estate and mortgage show on News Talk 580 CFRA.
With Frank Napolitano and Paul Rushforth, here is Steve Gregory.
The canal is open. Life is good.
Yeah, that's good news. Really good.
Earliest in got to be 3, 4, 5 years.
Yeah, 2 years ago it didn't even open at all.
Yeah.
So, and I think it's going to be open for a while. I mean, the weather, looking at the forecast for the next 2 weeks, certainly no warm spells. So, hopefully good for Winterlude, good for the city. We just had the junior championship here, which was good for the economy here in the city, and Winterlude is certainly a big boom as well. So
let's hope it goes through, because the last 2 years, the last 2 winters,
not great.
It hasn't been great.
Yep.
I was actually up at my cottage up in Constance Bay last night, and we went out to dinner at the Point, and I was talking to the one of the bartenders there, and he was saying the last 2 years have been their worst year on record for sales, mainly because the winter season up in Constance Bay on the Ottawa River and all the lakes. It's a big moneymaker. It's a huge moneymaker.
And you need the weather for that.
Skidooing is massive. It's a massive, massive pastime. And
ice fishing, right?
Ice fishing. Ice fishing. Yeah, but we went and walked on I'd like to say I walk on water, but I'd like to say it was ice. But it was, as I was walking on the water.
You keep believing what you want.
It was nice and thick, which is good. So it'll be good to see, kids playing hockey up there, fire huts going. Fishing huts.
But check the ice first.
Check the ice. Be responsible.
We're close
yes.
now. I think, even on where you are, I like to think that, are they starting to ice fish, Paul?
Are they starting? Oh, yeah. There's probably, sorry, I got a leak at the cottage right now, so I'm trying to manage my phone and this conversation. But.
You can leak at the cottage from here?
Yeah. But yeah, no, there was about, 10, 12 huts on the water, which usually up in Constance Bay, there's, anywhere from 100 to 200 in the water with big Mack trucks and four-wheelers and skidooers and all that. So it's a little bit delayed. Well, I wouldn't say delayed because we're early this year, but, I just feel like in years past, decades past, that, December, people were out on the water.
And it lasted a lot longer.
I think.
I wonder if climate change has anything to do with this.
Yeah, with this global warming, climate change, it's got a lot to do with it for sure.
Hey, you know what? This week, I will say this, and I don't know if you're feeling it, Paul, but lots of activity this week in our office. Many phone calls, and actually...
The world is coming alive again?
So many purchase agreements this week. It's like, did people go look at houses between Christmas and New Year's and decide to buy? Because this week, we got an influx of purchase agreements, which I could probably say we probably had a handful of weeks last year that we had as many purchase agreements as we did this year. In the first week of January, which is rare. I mean, it just doesn't happen often.
We've had, I found our Q4 of 2024 was really strong. Very, very strong. The real estate board also, the market numbers were very strong. And it's just carried on. I think having New Year's in the middle of the week slowed things down a little bit. This week was the first week that I think the market really started to go and started to pick up. I think people are squeezing a few extra vacation days out before going back to work. And I do believe, we're going to be probably ahead of where we were last January, and we had a fairly decent January. I do believe, though, that we are going to have a fast start to 2025. I think we're seeing it. Saying that, I thought it would be faster, though. I really did. I thought it would be. I did think it would be faster. I thought things were going to take off a lot quicker.
Well, home sales are up 8% from last year.
Yeah, we're seeing it. When you look at the real estate board numbers, and you look at the number of sales in December alone, we're up 8%, 7.9%. The average price was up 4.4%. But when you look at year to date, we finished almost 12% number of sales up, 11.8%, which is strong. That's very strong for a year that was supposed to be pretty flat. When we look
but that 11% is misleading, right? Because last year was brutal.
It was terrible, yeah. But when you look at the average sale price was actually up 1.3%. So we're just shy of $680,000 for an average sale price here in Ottawa. Keep in mind, at one point we were at $740,000. So we were much higher. We've come down. Not in 2024, but in 2023, we went down 5.5% on our average sale price. This year, we're up 1.3%. Where are we next year? A lot of economists are saying we're going to be anywhere from 3 to 6% up. I believe we're probably going to be anywhere from 4 to 5, somewhere in that range up average sale price next year, which is strong. When you think of an average sale price of $680,000 and you add another, 5% onto that, that's a good jump in our average sale price. And we saw years that we kind of cheated the norm and we're up, 50%. And then we've seen, us down. So I think this year is going to be a very modest 5% increase, which,
That's not bad for Ottawa.
well, when you see the last 2 years, 5.5 down and 1.3 up, 5% up is going to be a good year. So I do believe we're going to be in that range next year. I think the number of sales will probably be up double digits again next year.
Our number of sales are through the roof compared to last year, huh?
Well, they are. I mean, they're up.
Sorry, not number of sales, listings.
Our listings, yeah. Like the number of listings, year to date, active listings was up. Right now, currently at the end of the month, we're up 36%. But when you look at new listings year to date, was up 18%. So that's drastic. That's a lot of new listings, but we're still shy. We're still shy of where we need to be. And until we get more listings on the market and we start absorbing a few more things, I think it's kind of a double-edged sword right now, because we know that there's going to be listings hitting the market, which is great. But we also know there's going to be tons of buyers hitting the market as well, which we're already seeing. So if all those buyers absorb all these listings, we're now back into a seller's market with nothing to buy. So we could be in for a very strong, robust 2025. Saying that, there's a lot of economists that are thinking it's going to be crazy again. And then there's other economists that think, 3 to 6% on the average sale price. I'm more the latter. I do believe we're going to be about 4 to 5% average sale price increase. Not like the years of 20 and 25 like we were during the pandemic.
You're beginning to see interest, though, Frank?
We're beginning to see first-time home buyers curious as to, with interest rates coming down, what their budget would look like now that, you can get a much lower rate on the adjustable side. Unfortunately, I like to look at the interest rates as a roller coaster. You start at the bottom, which is where we started in mid-2022, and we were at the bottom. I mean, we went all the way up, and very similar to a roller coaster. We went up tremendously quickly. We hit the top, and last year we started to come down, and we had the big steep down where you come down, but you don't get to the bottom just yet. You get halfway down, and then all of a sudden it flattens out a little bit. So we're at that flattening stage right now where the job numbers came out yesterday, extremely robust numbers, both in Canada and the U.S., which means the bond market went up. So all of a sudden, we're not going to see the significant drops. I still think right now the economists have given it a 60% chance that Bank of Canada drops a quarter point and a 40% chance that they just leave it neutral. So
I did hear that it's almost 100% that they're keeping March neutral.
Well, we don't know yet.
We don't know until the numbers come out later. We will see some tough numbers come out in January when it comes to unemployment.
Well, I think the employment numbers, the unemployment came down. I think we're going to likely
came down, but we're still 1% higher than we were last
100%.
year.
Yeah. We're 1% higher than we were in. So if we want to get back to normal would have been pre-pandemic, 5 years ago today. 5 years ago today, prime rate at the banks was 3.95. Today it's 5.45. Unemployment was 5.7. Today it's 6.7. So we are not at the same stage as we were, and yet your eyes tell you a different story than statistics tell you. Our eyes tell us that, at least for me, clients I talk to, when I have two-income families calling me and saying, listen, we need to refinance because, man, we're just making it by, just barely, yet they've got pretty decent incomes, that's a sign that things are so expensive out there. We're overtaxed.
Yeah.
We're getting a little bit of break on some taxes right now, but, that's going to end on February 15th.
That's a minuscule break.
It's minuscule, and not if you drink liquor. If you drink liquor, forget it, because it's still taxed. It's just beer and wine. I don't know how that makes sense, but how they came out with that, but they did. But, some food is not taxed, which is good, because food should never be taxed anyway. I have no idea why food is ever taxed. Food is a necessity. Necessities should not be taxed, just like utilities shouldn't be taxed. You want to put taxes, in my opinion, should be on things that people want, not need. So, but, right now, so fixed rates haven't come down that much. And the likelihood is that we might see little increases from here on in until the labor market comes back down, the numbers come back down. So
but
the
there's
expectation is that February and March numbers will be lower.
Yeah.
So it's hard to say that now, March 12th, it's going to be neutral, because if the unemployment numbers come out in February and they're significantly more than they were in January, then I think it's going to put pressure on Bank of Canada to lower prime rates some more. So,
well, and the numbers are going to be much different when they come out in January and February. And
they
March.
should be
because let's be honest. I mean, we went through the Christmas season, but they did say part of the numbers is a lot of retail and full-time work, where we expected a lot of part-time work to get a lot of
40,000 government workers, though.
Yeah, well, they had
out of 90,000. I don't know. That's quite a bit.
Yeah, I don't know how every month there's 45,000 government workers. Like, you keep reading where we've got.
Well, there's one less now.
Yeah, we've got 40% more government workers than we did pre-pandemic, but our population's only gone up 8% or 10%. So why the big disconnect? So it'll be interesting. And again, we've got an election. There's so many factors. We've got the Trump. Who knows what he's going to do. We've got. Obviously, our own election probably feels like it's going to be in the spring now.
Oh, yeah.
But who knows? That could change. I mean, we've seen flip-flops where parties say that they're going to non-confidence and all of a sudden they don't. So we don't know.
I think they're committed now.
Well, they seem like they are, but who knows?
521-TALK, 521-8255. We will be right back. Welcome back. Paul Rushforth here, Frank Napolitano here, and the one and only Sean Reid joins us. How are you, Sean?
Oh, not Reader.
Oh, what do you mean? I heard enough of that last night. I don't need to hear that.
Well, hey, Reader, speaking of last night.
What was special about last night?
Frankie was saying you got some big news for us.
Well, you didn't share.
Well, he did,
them,
but the listeners,
with our audience.
Come on. I know. No.
Not with the three people who are listening today.
Yeah, exactly. Last night I was fortunate enough, I guess, to break the all-time record of most games officiated in the OHL at 1,109.
Wow!
You know what that tells me? If someone like Reader can do that, anything is possible. Because if anyone's seen Reader, I mean, he can hardly skate. I mean,
the Boo Birds were out last night for him.
He's built like a pear,
Sean, out of 1,109 how many were you not booed?
Maybe, I don't. Well, maybe just a couple at the beginning of the career because they didn't know who I was. So they always let you off easy at the start of your career.
I guess if you really want to get booed, you'll go to the World Juniors, though, huh?
Yeah, that was a tough one. That was a tough one this year, wasn't it? So, but no, you know what? All in all, it was a great night. I was able to be on the ice with three fellow officials that I worked with over the years, and the other referee. It was funny. Oddly enough, my very first game in the OHL was the Oshawa Generals and the Ottawa 67s, and the other referee last night I refereed with his dad.
His first game.
My first game ever. So
wow.
It's full circle. Last night it was the Oshawa Generals playing the Ottawa 67s. So
very cool.
Like I said, full circle there.
Congratulations.
Yeah, thank you.
It was great to see his family with referee jerseys on, and the kids are trying to get in front of the camera that shows on the big screen there at the arena. It was awesome. They had so much fun. It was so great to see.
All right, Sean, let me ask you this now. We've got an election that just happened in the States. It looks like we're going to have one here. Will there be any market volatility, do you think?
Well, I certainly think so. And certainly based on the conversations that we've had with our investors and potential investors that call in, January is always that time where people review their portfolios and try to make changes for the upcoming year. I certainly think that is top of mind for a lot of people, and certainly volatility in the market is going to be there. So when you're looking at your investments and maybe some an alternative, investing in private mortgages certainly might be that option where we try to we don't have a correlation in our investment to the actual markets. We invest in private mortgages and everything that you guys have said this morning. We know that, housing continues to have demand out there in our country, and there's certainly going to be some periods that, people have to continue, whether it's employment, we have to be cautious of, we have to interest rates. There's still some uncertainty of how much more, they'll continue to go down, and they're certainly going to go down, but we always manage that and on a daily basis. But it's certainly our investment of private mortgages takes away a lot of that volatility that you see in the market because we're not, have a direct correlation to the public markets.
Well, you've had a solid and consistent rate of return over the years.
Yeah, no, we certainly have. Just last year, just over 8% return, and that's what we're striving for again this fiscal year, of over 8% return. And our investors are very happy with that. And
what I find interesting is that through all the peaks and valleys in real estate over the last 8 years or so, your returns have remained consistent.
Yeah, and that's because what we do in private mortgages, there's always a need for it, whatever it may be. When we saw interest rates as low as they were, and people putting in offers on houses, sometimes not even seeing houses and having to close quickly. Well, that was the need for private mortgages. We were doing short-term deals because people needed to close quickly, and traditional lenders, whether it's a bank or a mortgage fund company, couldn't close those deals. So we were closing them, and then they would just refinance us out within a couple of weeks, a couple of months, and then they move on to traditional lending. So there's always a demand for private lending and a need. So it speaks to that in terms of being consistent with our return. We know that there's always a marketplace for private lending.
And you can use RSPs, TFSAs?
RSPs, TFSAs, and again, that speaks to, the timing of being in January. People always, whether you need to make your contributions for 2025, or I guess 2024 still, for your tax year in by the end of February. So we certainly can do that, and we welcome those opportunities for people. And we can always be reached at our office at 613-274-0055.
So if I've never invested in a MIC, how do I go about it from the start?
Yeah, you know what? It's a great question, because there's sometimes people feel that they're investing in one-to-one mortgages, which is not the case. You're investing in a pool of shared with all the shareholders, and the money is pooled, and then we lend out the money. So there's less of a risk that way. But it's just simply having a conversation, because that is part of our process. We want to make sure that, one, you're familiar with what we do on a day-to-day basis, but also, two, that it's a suitable investment. And suitable for a variety of reasons. And it could be, it's not truly a liquid investment. And what I mean by liquid, if you need to redeem your funds, we do have a redemption policy that we have to follow. And you can't get your funds out, the very next day or within 3 business days. So that's part of the process that we go through with people to make sure that they're comfortable, that it is a suitable investment for them, for their needs, for their risk tolerance and their time horizon. And most, quite frankly, we certainly see that it really works out for people, because people don't really know. And it's just starting to become, awareness out there in the marketplace that there are alternative options to people's traditional mutual funds and EFTs and the stock market that takes away, again, like I said, the correlation to the public market.
Do you find a lot of your investors stay with you and roll the money back in?
Most often, and even too, at this time of year, I just had a conversation with an investor yesterday, and he took out just a small amount. Every time someone takes out their funds, they always say the same thing: "We'll be back. We'll be adding more." It's just because when I do say about a liquid investment, we can distribute the funds back to people, but we provide that consistency. So when people are looking, at their portfolio as a whole, and I need it, maybe a minor renovation or trip or whatnot, they come back to us and say, "Well, you've been so consistent. I've seen that growth. I'm going to just take some money out in the short term, but I'm going to come back with some more and, top up with what I took out, but I'm also going to put back more." And that's a constant conversation that we have with folks.
And what's the website where we can read more? No pun intended.
So where you can read more. It's advancedmic.com. So it's very easy to find.
Advanced MIC, right?
MIC. I was just going to say MIC. We say MIC, but it's some people, what does that stand for? So MIC, Mortgage Investment Corp.
Outstanding. Well, congratulations again on reffing those. When's your next game, by the way?
My next game, I have the weekend off. They thought that maybe there would be some celebratory festivities last night.
Well, guys,
but I do have to say, the younger guys I was with, I think they're probably still in bed right now.
They stuck it out, eh? I left at, I don't know, midnight, 12:30. I don't know what time everybody else stuck around till.
Seeing that you have no games coming up in the near future, can we make them feel at home, guys? Boo!
Yeah. You suck, Reid! You suck!
I heard that a couple of times.
Yeah, there you go.
Congratulations. Have a great day.
All right, thanks, guys.
521-TALK, 521-8255. We'll be right back. Welcome back. Frank Napolitano here. Paul Rushforth here. Hey, rent came down in December.
Rental costs?
Yeah.
Yeah, it's not coming down. It will go back up.
Average rent was $21.65. Last year, $22.28.
Yeah, it's still going to go back up. It has to go back up. I know we talk about lots of first-time home buyers getting back into the market and getting out of the rental trap, but there's lots that can't. I mean, once you get into that rental trap, it's hard to get out. I mean, when you're paying, $25,000, $3,000 plus utilities, plus groceries, plus gas, it's hard to save to get back out of that rental trap. And so I think there's still going to be a huge demand on rental units. I think there's going to be
You think rent's going to go back
Supply
up
and demand,
again?
I do think rent's going to go back up. But here's the problem. So you think that, in the past years/decades, I would have looked at this as an opportunity and said, okay, there's more people going into rentals. Maybe I should buy more rental properties myself and be a landlord and have more. Problem being, and I have to be very cautious because I'm still a big believer in buying units. I'm still a big believer in acquiring doors. And it was actually one of our good friends who listens to the show quite a bit who actually said to me, Paul, you seem a little bit down and talking down to people who want to buy investment properties. I'm like, no. Not at all. I still think it's brilliant to buy investment properties. There's lots of perfect ways to build wealth, and buying investment properties and renting them out is a great, great way. All I'm saying right now is tenants have all the rights. Tenants are really tough right now. Just make sure you get the right tenant. Make sure you do due diligence. Don't jump at the first tenant. Make sure you look at their references. Don't go back to the last reference. Go back to 2 references, and I'll tell you why. The last reference, if they're a bad tenant, they just want to get rid of them. So they're going to tell you whatever you want to hear to get rid of those tenants, and they might say they're perfect tenants. Next thing you know, they're not paying their rent. So I would go back to 2.
If you're going to put a reference down when you're looking for a place, you're only going to put down good references.
References are waste.
I agree. But as a landlord, I'm actually saying to those people, and I've done it many times, I'm like, okay, who are these references? Oh, my friend Betty and my friend Bob. And I'm like, okay, I don't want your friends. I want to know how many times you've rented, who you've rented from, and I want to know those renters' numbers. And I don't care about your last landlord. I want your one before that, and before that.
Credit
because
bureau.
I want to see credit bureaus for one.
That's key, right?
Well, credit bureau is absolutely key, but you could have the best credit in the world and still be a jerk as a tenant, right? So I think you need 2 things. Credit, and make sure that a lot of times they're a renter for a reason, so the credit may not be amazing. So you might have a few glitches here and there, so you have to look into that. And then secondly is you need to know who you're renting to, the type of people they are. So I would be asking those hard questions when you're talking to the references and say, who are these people? Don't just, do they pay on time? The most important thing is, do they take care of your property, right? Are they people who, because I'm renovating 2 properties right now that I can tell you the tenants paid on time every time. Good people, very good people. I'm now renovating these places. They're disgusting. And I
hope they're not listening.
I don't care if they're listening. I honestly don't care if they're listening. They should be ashamed of how they left my house, to be honest with you. And the mess they left, and they're, one person is like, well, we had a family of 5 and we lived there for 7 years. And I said, well, that's great, because I had a family of 5 too at one point. I lived there for 10 years and I didn't have people peeing all over carpets and stuff like that. So
you didn't?
No, I didn't. Yeah. Well, my kids probably did, but anyways.
You sure?
And maybe it was me occasionally a few nights
Friday
nights, maybe a pee here or there. Who knows, but what I'm saying is, yes, it's a good time to get investment properties. Yes, it's a good time to build wealth. Yes, it's a perfect time to keep those properties because there's lots of people who are still in that rental trap. My thing is just make sure you do your due diligence and do it right.
Still tough to cash flow, though, right?
Not always. I mean, the rates are coming down, but it is still, we went from you buying a townhouse in suburbia and having, $6, $7, $8, $9, $1,000 cash flow to being underwater. Yeah. Now you're still a little bit underwater, but if you look at the bigger picture, and I've said for years, if your investment property doesn't cash flow, it's not an investment property. I came back on that a little bit as we went through COVID because I said, okay, great. You might as well buy that investment property now. You're probably not cash flow positive, but the home you just paid $550 for is now worth $600. So you've built that equity. So,
and if you bought 5 years ago, you're so far ahead.
You're so far ahead. Yes, the last 2 years we've had some average, if not terrible years, but the 3 years before that were crazy. We're insane, and you built up a lot of equity. So I am definitely not poo-pooing investment properties. All I'm saying is if you are going to get an investment property, do your due diligence, do the right things, make sure you get the right tenants, ask the right questions, because the right tenant, it's worth its weight in gold. The wrong tenant is so much aggravation, it's painful.
What's the availability of duplexes and triplexes in Ottawa?
Well, there's availability, but you have to have deep pockets, right? I mean, investment property, you got to put money down. You have to put your 20% down when you're buying an investment property. So, most of them, if you're looking for a good duplex or triplex or 4-unit, you're at least $1 million, like unless you want some slumlord, but you're at least $1 million that you're spending on one of these duplexes and triplexes. Well,
can you cash flow on those?
But if you're putting 20% down, there's $200,000 right there just in a down payment. Right,
yep.
So you got to have deep pockets.
You don't have a choice. You're not buying a rental property with less than 20% down anyway. You've got a 30-year amortization you take advantage of, but they're still not cash flowing. And again, sometimes it's a risk and reward, and you ask yourself, all right, the reward could be that I could go up $50,000 in 5 years in property value, and the tenants paid my mortgage, and it's gone down another $30,000, $40,000. But the risk is if I get the wrong tenant, I'm going to lose a lot of money. If they ruin my house and I got to go in there and do $50,000 in renovations, so what? So I made $50,000, I got to put it out in renovation. So again, it's not for everyone, and I think it's for less and less people. As prices of homes have gone up, less and less the everyday person could have bought an investment property, and we're still seeing. So the scenarios we are seeing is exactly what we talked about, which is somebody that bought a house 5 years ago, and all of a sudden they bought a townhouse for $380,000 5 years ago. Today, that same townhouse is worth $600,000. Their mortgage, even if they bought it with 5% down, is down below $300,000. They've got all this equity in it. If they've got their down payment, and even if they tap into some of the equity, and they can cash flow that property from a neutral standpoint, and take some of the equity out and use it as a down payment towards a new house, and they can afford the new house what the payments would be instead of using all the equity. Because you can never borrow up to 100%.
Yeah.
So you're only going to be able to borrow to 80% of that equity. So if it's worth $600,000, you're going to be able to get $480,000 out. If you can afford to do that, then I see people saying, you know what, I think we're going to hang on to it. We can get the right tenant in there. It's cash flow neutral, and then we'll take that extra money. We'll put it towards their down payment.
Are you seeing parents buy investment properties and put their kids in?
No,
I am.
I'd like to see parents do. I think parents would like to do that more because they really want them out of their house. But
yeah, it's a win-win, right?
It's a win-win. Except for, can the kids afford to pay the mortgage payment of that investment property, or then are you subsidizing them as well? So for some parents, they'll say, if I got to put out $1,000 because my kid can only afford X amount, but the house is going to cost this much, I'd much rather they just live at home.
You know what, though, Steve? It's really hard to evict your own kids, though, right?
Is it?
Well, hopefully you wouldn't want to.
Yeah, it's pretty hard to put your own kids on the street, but but you know what?
Seems like a good idea, though.
You know what it does? Because saying that is, I look at some of the investment properties I have, and my kids are at the age now where they're about to be living on their own. I mean,
no, they're not. I talk to them. They're living at home for free.
You mean
5 more years?
But I would. Why not? I'd live till I was 30.
Your kids are in their 40s?
Yeah. But you know what, though? I would love to put my kids in one of my rentals and get them to pay rent. One, I think they respect the place a little bit more. They're obviously going to be paying me rent. And I don't want to come down negative because I've always been a proponent of buying investment properties, and I still am. You just more than ever, you have to do your due diligence. Before it was like, okay, if I got the wrong tenant, I just kick them out. And it was so much easier. Now it's not so much easier.
But what about a rent to buy with your kids?
You could do something like that.
You're giving the kids an opportunity to get an upper hand, and even though they're paying rent, at least they're paying rent towards something, and you're helping them out.
Yeah, you could do a sort of a rent-to-own. I mean, I personally wouldn't do a rent-to-own. I do it with my kids, but
That's what I mean.
I wouldn't do a rent-to-own otherwise, but with my kids, I would for sure. But nowadays with the way rent is, I mean, townhomes are. I mean, I got a bunch of townhomes that are 26 to 28 a month. That's a lot for a kid to pay. Unless they got a couple roommates with them and, they're each paying $1,000. But then, you got utilities on top of that. Most kids are going to be like, why would I pay $1,000 or $1,200 or $1,500? I can live with mom and dad for free and get groceries for free and utilities for free. And that's what we're running into. But no, I'm still a big believer in investment properties, building wealth, building doors. There's lots of other avenues out there. We just talked to Sean Reid from the MIC. There's lots of other things you can do with their money.
Yeah.
But it is the easiest way. There's more wealth in real estate than anywhere in the world. So I'm still a big believer in getting into real estate, doing the things right.
Dario made an announcement for home renovation incentives this week. We'll talk about that when we come back. 521-TALK, 521-8255. We will be right back. Back to the show.
Sorry, Stephen, I was busy doing some homework.
Oh, were you doing homework? What kind of homework were you doing? Never mind. Never mind. Who are you betting on? So, home renovation incentives kick in on January 28th. Ontario government announced a plan this week. Rebates up to 30% on home renovation projects.
Okay.
Energy efficient home.
Yeah, name some.
Windows and doors.
Doors.
Insulation.
Yeah, which is amazing.
Yeah.
Which is amazing, but how easy is it to get those rebates?
Very quick.
Is it?
Yeah, apparently very quick, like within a couple of weeks.
Okay, so some of them are some good money, right? Windows and doors, what do you
Yeah, insulation up to $8,900.
Awesome.
Ground source heating even more.
And the thinking is to reduce families' electricity bills.
Yeah.
That's the thinking
Yeah.
behind all of this, it seems like. So
my question is, if you're selling a house and it's got old windows and doors and you can get 30% back before you sell, should you change them?
No. Yes and no. Depending on where you are, the price of your home, those are things that you just expect to have there. It's like a furnace. It's like, you expect to have a working furnace. You expect to have working windows, working roof, things like that.
But if you've got dated windows, old windows,
will it help your house sell faster? Yes.
You won't get it back, though.
Will you get back the 14, 15, 20 grand that you're going to put into windows? No, you're not. Would you get back the money you're putting into your hardwood floors and your light fixtures and your kitchen and your bathrooms? Yes, you will. Will you get your money back on windows, on roof, on furnace? No, you won't. They're expected, though. They will help your house sell faster. If you're in competition with the neighbor down the street, you have new windows, you have new doors. A similar house, yours is probably going to sell faster because people see less dollars going out the door. But those are upgrades, and we've talked about upgrades on the show before. There's certain upgrades that increase the value of your home. There's certain upgrades that don't, but you do have to do. Like your furnace conks. You have to put a new furnace in.
Yeah.
But don't put a $6,000 furnace in thinking you can sell it for $6,000 because you're not going to. You're just not going to. So, but there are certain upgrades that will increase the value.
But if you're a buyer, it changes things, right? So if you're a
this
buyer,
is what I was going to ask you.
And you go into a house and you're paying $600 for it, and then you get your home inspection, and the home inspector said the windows maybe have a year or two left. You might be in a position where you can negotiate and say, "Well, I'm going to pay you $590 because it's going to cost me $10,000 to do the windows." And now, if this program is in place, well, great timing for it. You'll get 30% of that money back. So
it all depends on what market you're in. Don't forget, right?
Yeah.
If you're in a seller's market and you say, "I want $10,000 off the price for windows,"
it's a deal breaker. It's a deal breaker.
The answer is like, go fly a kite.
Yeah.
You're in a really strong buyer's market, which we haven't seen in quite a while. But if you're in a really strong buyer's market, different story. I want 20 grand off the price, and you probably get it. Right now, we're in a bit of a balanced market. There's talk of us teetering towards a seller's market with all the variables that are going on in the market. If that does happen, if we are in a seller's market, then yes, it's those things are irrelevant. You're fixing them for yourselves. But you're right, Frank. In your scenario, you go into a house and you find out the windows aren't great. Maybe you move on to the next house that has the windows that are done. So maybe your house doesn't sell or sells for less money or takes longer to sell.
But here's my thinking on this. If you're looking at a house and it's got bad windows and doors and insulation, could you not use the purchase plus improvements, and then you're also going to get the 30% back?
Of course. Yeah, there's multiple. facets. It's just that, like Paul said, if you're in a seller's market, the seller might say, too bad, this is my price. I'll wait for somebody else to buy it. Then you got to be able to be flexible enough to say, okay, then I'm going to go to another house and I'm going to.
But now you have options, right?
But at least you've got options to work with. But you may not be willing to pay $600,000 when you put that offer $600,000. The intent was that the windows didn't have to be replaced in a year or two, or the furnace doesn't have to be replaced. So
no, but what I'm saying is, if you see that now and you're looking for an older home that needs that kind of stuff,
you can apply.
At least you're going to save 30%, up to 30% on making those changes. So factor that in.
It's less expensive now to renovate that property and buy that. Yes. Yeah, you could still use that to try get money off the price, but knowing you're going to save it when you do go to do that. I'm glad they've done that. They've done it in the past too, though, where the rigmarole to get it approved is like, it's not even worth it sometimes. So that's why I'm saying.
Yeah, apparently this is supposed to be very streamlined. And
well, let's hope. Let's hope if it's streamlined, that's amazing. I mean, you can get discounts like that off things that you need to save on your utility bills and things like that. I would. I mean, I'd do it if you have to, but if you're doing it just to sell your house, I'm not sure if I'd do it.
No, but if you're buying it, something to think about.
Absolutely, if you're buying something to think about. I would, before you do something like that, before you do upgrades like that, I always say, get us through the door, and we'll tell you, okay, yeah, you're in a $1.5 million house. Yeah, you have to do it. Oh, you're in a $300,000 townhomes. I wouldn't do it. I just wouldn't do it. So just
find me that $300,000.
Well, as I'm saying that, I'm thinking to myself, what are we, 2019 now or something? But I'm just saying, if you have a lower end, it's almost like granite countertops. Do you need to put granite countertops in a townhome? Yeah. Probably not. Yeah. Do you need to have granite countertops in a $1.5 million home? Absolutely, you do. So it's like that.
So what about the Purchase Plus improvements? How does that work?
Great program. It's just that what you need to understand about it is that you need to be able to provide your mortgage broker or the bank with your quotes up front because it's part of the mortgage then. So, if you're buying a house for $600,000 and you provide us with quotes for, windows and doors and a new furnace, which equate to $20,000, we're going to send in the application with a purchase price of $620, including the improvements, so that we can get qualified based on the $620 and not the $600. But what happens is at closing, then it reverts back to the $600, which you paid for it. Once you complete the renovations, then you have access to the other $20,000 less your down payment. So that money actually gets sent to the lawyer in trust. Lawyer hangs on to it, and then when you provide the mortgage broker and or bank with proof that you've completed those upgrades. And generally speaking, it's 90 days they give you. I've seen exceptions to 120, 180, depending on what the upgrades are. But generally speaking, you've got to complete them within 90 to 120 days. So I've had people say, yeah, can I get the extra money? And maybe in the next year or two, I'm gonna do these things. It's like, no, that's not the way the program works. The program is meant for you to do the upgrades at the time, within a reasonable time of when you're moving in, the first few months, not wait a year or two to do it.
Now, we haven't talked about rates.
Yeah.
The 5-year and the variable adjustable, almost at par right now.
They're almost at par. So we're within a quarter point, I think, in most circumstances between a variable or adjustable and a fixed. So, it begs the question, which one? If you're a conservative and you're not going to sleep at nighttime because you're scared that an adjustable variable is going to go crazy and go up on you without you knowing, then I would say you might have to take the fix. Now, I would lean towards...
with a new president and a new prime minister coming our way and make the possibility of tariffs, is there any possibility rates will go up?
Not really. We don't see it. Economists don't see it, but it doesn't prevent the everyday person who saw rates skyrocket from 22 to 23.
And doesn't know.
And listens to their parents who paid 18% and 16%. And all of a sudden, that's that scare tactic that without doing their homework on it, they're just nervous and scared. And if that's the case, take a fixed-term mortgage. Know that you're in it for that time frame likely, and know that you might regret it. Maybe not, but you might regret it. But you're not going to be able to get out of it, especially if you're with the big bank. Because if you're with a big bank, the way they calculate the penalties will make it impossible for you to break it. And
especially if rates come down, right?
Especially if rates come down. The penalties will be exorbitant. So,
all right. Birthdays?
Birthdays, just a couple. My cousin, Rene, celebrated his 50th birthday this week. And Josie Murtos from our team and my wife's cousin celebrates her birthday this week. So happy birthday to both of them.
We had a few actually on the what's the date today?
You're trying to remember them now?
Well, today's the 11th, so yesterday it was a big day. We had John Hall, who came over from Tracy's team, celebrated a birthday yesterday, as well as Tracy Arnett, who celebrated her birthday yesterday. I had Ashley this week who celebrated a birthday.
Look at you off the top of your head.
Wow.
No notes or anything.
Right. I know there's more. Oh, an old friend of the show, a good friend of mine who used to work with me, Josh Batley, celebrated a
he
birthday
did.
yesterday.
Oh, yeah.
So happy birthday, Josh. And actually my, I guess he'd be an ex-father-in-law now, Wayne, has celebrated his birthday yesterday too. A big one for Wayne too, number 80. So happy birthday.
Look at you guys go.
It just hit me when you're like birthdays. I'm like, damn it, I need to know birthdays.
I've got 23.
Yeah.
Have a great week, gentlemen.
Have a great week.
Have a great
Support
week.
local business and charities, everyone.